you've seen GDP estimates come down to 0.2% if you look at the Fed dot plot. So it's interesting. Last year, when GDP estimates were 3.8% for this year, the Federal Reserve thought that it would make sense to have a Fed funds rate at 10 basis points. And now that GDP is collapsing and going to be basically flat for the year, they think that it makes sense to have the Fed funds rate at 4.6%. So it's like a dog chasing its tail. Like Winston Churchill once said, generals are always prepared to fight the last war. And my biggest fear is that they're going to overdo it and have to walk it back. We've already seen instances of that in Europe with the ECB having to go into the market and buy bonds for the periphery like Italy. We've seen it with the Bank of England having to walk back and buy bonds, buy gilts. And we've seen it from the RBA in Australia hiking less than expected. And I do think the Fed will be next.